Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 9th, 2016. In this video, let's take a look at the currencies. I've done more than enough videos on gold lately and GDX, and I'll continue very frequent updates when there's a lot going on. That sector's been on the move more than anything else. Hence the reason for the increased activity. A lot of those have been posted in the trading room only, some on the front page as well. This one, we're going to take a look at the currencies. Now, the currencies, I do that because, as I mentioned, that's largely, not exclusively, but largely what drives commodity prices, and it definitely has an impact on precious metals. There's a very high correlation between the dollar and gold, and so if we can get a good read on where the currencies are going, that really helps us position on the correct side of the gold trade. Oil's another example. There was some very bearish news out today on oil, just tremendous supply flooding the market. But oil prices held up relatively well, and USO even managed to eke out positive after the open today, after gapping down a little bit on that really bad news. And the point was, it was the dollar, the weak dollar, that helped. A weaker dollar supports oil prices. So either way, let's move on and look at where we're going here. This is the U.S. dollar index, looking at it from a daily time frame. This chart, let's take a look at what's happened in the dollar. This was a primary uptrend line on the dollar, which broke down back in looks like in the middle of last year, around August, late August. Broke down, back tested, came up, made a higher level back test, and has so far rolled over. I've been bearish on the dollar. I pointed out these patterns here in the dollar, the euro dollar pair, the euro and US dollar pair. The yen had a similar pattern. So those patterns broke out, and this right here is what spurred that huge run up, that monstrous, nearly vertical run in gold. Was due to those patterns breaking out. And as I mentioned a couple days ago in one of the videos or in the forum, I can't remember, I was kicking myself in the ass because I predicted this move in the dollar. I didn't know how sharp it would be, but I did predict a downside breakout in the dollar, and of course that coincided perfectly with that move in gold. And really, this should have been drawn like this, the dollar from that point, this was the real drop up from the highs. The prices were at the top of that pattern when I did that video. If you want to check that out, that video was the video posted on January 29th, and my overview on the currencies starts at about the 11:30 minute mark. It was called the market overview video. And again, that's hindsight, but it does kind of factor into everything because these are the patterns we'll talk about. All right, let's move on. So there's the dollar. Now, here's longer term. I remain bearish on the dollar, but it's hard. It's really hard to call these currencies, and of everything out there, this is what the central banks can directly manipulate. There's a lot of conspiracy theorists out there. They talk about the PPT, the plunge protection team, that this shadow team set up by the Fed to come in and start buying stocks at critical market junctures and this and that. The PPT may exist, or at least in the form some think, or not. But what we do know for certain is central banks, and they make no ways about it, they come in, they manipulate their currencies. They can and will, and they do that. So, they will, a central bank will stop, a slide in the dollar if it's getting to the point that, for whatever reason, they want to. There's pros and cons to weak and strong dollar, and I'm rambling, I'm getting off topic here, but I want to mention that, they can and will step in if they need to, and that's why you sometimes see sudden rips and dips. But ultimately, over time, like everything else, market forces will dictate where a currency is going. That's so. To try to clarify what I'm saying is, yes, in the short term, the central banks can step in and intervene on their currencies, but at the longer term, if a company, a country, I should say, their strength of their currency will reflect a lot of things, such as the prevailing interest rates at the time, interest rates on other currencies, the fiscal shape of the country, and things like that. So this is what we're looking at here. daily chart of the dollar, and I have the support line right here, roughly 96.36 on the dollar index. And you can see numerous reactions right here from below, reactions from above, back here, reactions from above. So I give this line some, I would call it a decent support level. We also had, I had this downtrend line drawn here at this point in time. This was a downtrend line that I was watching. Prices took it out and had a sharp advance after that. Now all I did is extend that line, and you can see this is where I had it before. We're also backtesting there. So there's two levels right there of support that we're currently backtesting on the dollar. Add to that, we've had this move down from this rising wedge pattern here. And what I'm doing is measuring that out to get a rough estimate of what any type of wedge or triangle pattern will project to. If prices break down, you take the distance of it. In some cases, sometimes you can add it to the top, sometimes you can add that to the bottom part. That would be the longer end of the projection if I added it to the bottom of where the prices broke down. So you can see that we've pretty much met the projection for that drop in the dollar. Hence, my inclination here is that the dollar has very limited downside before, at the very least, a reaction, meaning a pause and or consolidation, possibly a bounce. So we have the dollar at support. I've also noted down here, this is the RSI, the daily RSI. Look at these oversold readings. So when you see the dollar oversold, you can just follow the vertical line up on the crosshairs. That was that point there. Of course, we had a mega run, one of the strongest runs in the dollar, not only in years but in going back and almost in history. That was just a tremendous run. Either way, that's I don't expect to see anything like that anytime soon. But my point being here's a triple tap. I call that 1, 2, 3 consecutive hits in close order. So let's just put the crosshairs at the lowest point there, or at the last tag of the oversold level, and you can see a nice rally, came back down, never even hit those lows, and moved up again. So that's really to quantify it. You can see the moves there. So that would be from this point. Oh, wrong tool. Let's grab the arrow tool. So we had the initial reaction. This one was over here from there to there. And this one actually, because we never came back and made a full back test of that low, that was the scope of that move. Next tag of oversold was here. So we had that initial sharp pop, and then ultimately that's how much higher the dollar went. And here, next tag there. I guess that's a continuation of that other move. But you get the point. We are oversold at support in the US dollar right now. We have broken out of a bearish pattern recently and have met or exceeded the measured move. Now, those are just general rules, but this is what I'm putting a lot of weighting into right now. Oversold at support in the dollar. And, the bigger picture, support levels can break, and they, over time, they often do. So just because we're at support doesn't mean that the dollar has to reverse and move higher. The bigger picture, and this is where 2016 and beyond, the bigger picture right now is this trading range that we've been in. Let's see if I can highlight it here. Well, the highlighting tool is just shading everything yellow. 1 second. Okay, this is what I'm referring to here. This is, actually I should have gone back a little farther in time. This is the range. This is a trading range the dollar has been in since the beginning of 2015. And we had a very large move leading up to that. So the next major trend in the dollar will be determined depending on which way this breaks. I won't even at this point try to forecast it. I'd have to study the charts a little further. I'm leaning towards a downside resolution, but that's neither here nor there. As traders trying to swing trade these and get on the right side of the miners, that we'll look at later. If and when we get up to this level or break out one of these, the upper end or the bottom of this trading range. I just wanted to share that. So currently at support, dual levels of support, and I'm looking for at least a little bounce. Now, one thing giving me pause here is the what this recent consolidation action. Now we hit that support level, and we've actually had a couple daily candlesticks off it already. And this to me looks a lot like a possible bear flag pattern because you have that move down and a consolidation. So if this is flagging action and we do break this support, this is something you need to be on alert for. That move would measure down to about that next support level I have here, and I'm just taking the distance to the flagpole, adding it to the flagging action in the dollar. And if that happens, that's going to be bullish for gold, folks. That will definitely or almost certainly give gold the ump it needs for the next leg up. So something to keep an eye on. Bottom line, keep it light because this can go either way, but I do favor right now a bounce, and I'll continue and show you why. Okay, this is a weekly chart going back a decade or about, I think a decade here on the dollar. And here's a few things I pointed out. On the weekly time frame, we've only seen levels cross above the 70 level, the oversold level on the RSI, 3 times in the last decade, and you can see what happened those 2 previous times. We had not just corrections; these were trend reversals in the U.S. dollar. So that is what happened here. Now, so far, all we've done is consolidated. We're still recently off those, relatively recently off those oversold readings, and this was the most extreme overbought reading. But now it's also formed this divergent high. I have these divergences, strong divergence, because we made an equal high that we double top there. So you have prices making an equal high against the indicators making considerably lower highs, i.e. negative divergence, hence my longer term expectation that the dollar breaks down from this trading range, and that is that trading range, this area here that I just covered on the daily chart. So you can see this would be your support, first target level. Down here, this horizontal line around 89.50-ish, and then we'll probably come down to this level here over time. Again, that's the much bigger picture, but that will help those longer-term traders, trend traders, investors looking, to get into gold and then wondering how long to stay in gold and other commodities, that are dollar-sensitive assets. So now let's look at another time frame here. Well, this is UUP. Now, this is the dollar ETF. And the ETFs attempt to track an index. They don't always do it perfectly. So this is really that same trading range. I could put some flat lines. I do have some horizontal support levels here. And I also drew what looks like this symmetrical triangle pattern here on the UUP, the dollar ETF. So again, that may come into play. Don't want to put too heavy a weighting on these trend lines because there's only a few reactions. But either way, if the traders are watching that and you get a breakdown, we could move lower. Now we're also at support when we're oversold. We've had quite a run to get to that level. And when you have these extended runs into resistance or an impulsive, yes, and extended, meaning prices move up very quickly without a lot of consolidation in between, near vertical run, you often get those sharp reactions off those levels. So let's see, maybe we get a reaction here, a bounce in the dollar. And again, that's a weekly chart. So let's start drilling down and take a look at the daily chart of UUP here. Okay, this is, again, looking at UUP, it'll be very similar to the dollar index we're just looking at. So if I boxed it in here, we have that big trading range that we've been in for a while. And this, where I said upper support zone, those are old notes, but the bottom line is this is the bottom of the support zone in the dollar. If and when that goes, that would almost certainly indicate that the next trend down. And we'll want to scrub these charts with the euro and the yen, and I'll hit on those real quick. And like always, longer term, the bigger picture, we're focusing on the weekly charts a minute ago. Here's a good example why you don't always take daily breakdowns, especially intraday and even intra-week breakdowns. There's a little whipsaw false move down in the dollar, and prices got right back up in there. So again, longer-term traders positioning on a breakdown or break above this range, you want to most likely you want to wait for a weekly close above or below. So here's the dollar. This is the pattern I pointed out on the site the other day. This rising wedge pattern. We were actually at the top. When I say the other day, I'm sorry, that was January 29th. I believe it was a Friday, and I expected a downside resolution, and that's exactly what we got. And it came very powerful and swift, and that is why gold is almost an inverse of this. The move up in gold was just as sharp in the opposite direction. So if and when the dollar catches support, there's a big fat gap back here. The dollar may find support there. And again, this is UUP. Not my favorite vehicle to track or try to guess where the dollar's going, because this only trades on at least the charting. The candlesticks you see here just show trading that occurs during the U.S. markets, the regular trading hours, 9:30 Eastern to 4 o'clock, whereas the currencies trade around the clock. So let's now focus on before I leave the UUP, because there are some traders that trade the UUP, and that's why I wanted to take a look at it here. This is that sort of flagging action I mentioned, and so I hate to do this. Lately some of my analysis has been more wishy-washy than it normally is. I'm showing, well, here's the dollar can do this, it can do that. Typically, I can't stand contrary, analysis that by the time you end up watching the video, you don't know what I'm predicting the dollar will do. I am leaning towards a bounce, and I'll make that case, but I want to leave the door open. If these support levels break that I showed a little while ago on the dollar, and there is this potential flagging action, then that's going to take you down quite a bit lower. Not expecting that right now. One reason, if you look here, this is a daily chart. We can see some potential divergence setting up in the dollar. I also mentioned the dollar was at support. I'm drawing these lines a little below where we are. This is a trend indicator. Now, the trend indicators have been very whippy lately because the dollar, keep in mind, until this recent sharp move, the dollar has been in a sideways trading range. Trend indicators don't work well or at all in sideways trading ranges. But once we break out of a trading range, you can see here, this is, if I'm zooming in, which I am because we're on a 60-minute chart, this is the pattern that I was talking about. I forget how I had it drawn. Either way, you can draw the most important is the lower trend line here, and you can see, the dollar had some pretty well-defined support, and it broke below that. So when you have these trading ranges, just like a wedge is in a sense a trading range that's contracting. And you can also have sideways trading ranges. When you get the breakouts of those ranges, either up or downside, they're very impulsive, the initial move. And so that's something I'm on the lookout for. But like I said, this divergence and the fact that we're at support give me pause. All right, let's speed things up a bit. Look at the euro. The euro, here's a chart I can follow that trades around the clock. The euro-US dollar pair. So this is what the euro is doing against the dollar. And as I often reiterate, the euro is by far the largest component of the dollar index, and with the yen being number 2. So looking at this chart, and I'll stayed on that 60-minute time frame we're at. So far, look at what we're doing here on the 60-minute. We're putting in a divergent high. The MACD is still pointing up. So as I always say, this is what I call potential divergence. I refer to it as confirmed divergence when the MACD makes a bearish crossover, meaning this blue line, the signal line, crosses below that white line. That will be a what I call confirmed divergence. If the MACD and the RSI do not make a higher high, they have to stay below these levels. So you have divergence up to this point, even if it's flat. It's flatline divergence because price is already higher and would continue higher if the MACD goes up here. So as long as we stay below that low, and that's my expectation. I'm looking at this divergence setting up. We've had a very sharp extended move, and again, I'm making the case, and I'll be clear on it, that I do favor a reversal in the dollar here very soon, meaning dollar up. When you're looking at the euro chart, everything is in reverse because this is the euro against the dollar. So if euro down would equal dollar up. So it might be a little too early to draw this, but it would look something like this. We'd come down, there's an uptrend line to test, and then a breakdown, and I'm just doing this live right now. I don't have targets identified, but I would have to say somewhere in this area you can see quite a few reactions. That would be my initial pullback target here on the Euro US dollar. And this is the daily time frame. This is that symmetrical triangle, and again, I everything I forecasted or predicted an upside resolution favor that of the pattern, and sure enough, that's what happened. This purple line here, I drew the distance, the highest, the widest part of that triangle pattern, and you can either add it to the before where prices broke out. On the upside, you'd be looking at a move to about this level. And when I look at this chart, I can see it playing out. I can see this is a very impulsive breakout, and we've had, if you look closer, we've already had this consolidation. There's that same flagging action. We're looking at it in reverse. So on the Euro US dollar pair, it's a bull flag pattern, and unfortunately, well, depending on what you're looking for and how you're positioning, and this is why again it gives me pause. There's the flagpole, from where the sharp move began, leading up to the highest point in the flag, and then if you added that to the bottom of the flag, and for those of you that aren't clear what I'm talking about here, that's the flag would be this area down here. It would be easier if I looked at this on the 60-minute chart. You'd see the flag a little bit better, but you get the point. The consolidation, and then again, there's the flagpole, add it to the bottom, and that comes right up to these targets. I don't know if you can make out these lines. I'm sure you can when I highlight them. Very nice resistance there. Now, this is not coincidence. Remember when we were on the US dollar chart, I talked about that trading range that we've been in throughout 2015. And you can see it just as well here on the euro pair. I mean, these are all related. This is the dollar against the euro. So that's kind of where I'm at. If this proves to be a false breakout, if a lot of bulls are watching this, currency bulls, and expecting a move up to the top of that trading range, and then those divergences I pointed out happen to play out, then that's going to prove to be a fake out, false breakout. And if that's the case, usually the reaction is pretty violent when you come back in on a false breakout. Should that pattern not play out, I'd expect a very sharp reversal there, which means dollar up, which means gold down. That's where I'm going with all this. Or unless you're a currency trader, then you can take these charts and play them accordingly. So, if you're just playing the pure technicals, I often anticipate, I like to get in front of moves that I think will, breakouts that I think will fail because the reaction in the opposite direction is sharp. But I also like to play breakouts. I'm not always contrary for the sake of being contrary and betting against all breakouts. If you're just a conventional by-the-books trader, you were long, you would have been long here. That line was pointed out. This pattern was pointed out in the video. You would have noticed this consolidation action, this flagging action, and then we broke out earlier today. You would have been long here, and with a target up somewhere up, a little shy of the projected measurement. I usually like to take my profits, so I have a resistance zone. But again, I don't think that happens just yet. This is a now 2-day period. I just wanted to take a look at the bigger picture. And the bigger picture shows this trend line. This one I added fairly recently. This goes all the way back off the peak highs in the euro. That was back in May of 2014. We first had this downtrend line, the white one that I followed for a while, and the breakout of that led to that sharp rally, came back, nearly back tested it. But I also have numerous reactions, 1, 2, 3, 4, 5, and then we just broke out of that. So longer term, that is bullish for the US dollar, and again, I'm making a case, euro US dollar pair, I'm making a case euro up, dollar down. So I think ultimately, even if we get a little pullback here, we head up to the top of this basing pattern, or this consolidation pattern, multi-year consolidation, and then ultimately break out. So that would, in 2016, heading forward, looking for additional strength in the euro and additional downside in the dollar, which net should be bullish for gold. So like I said, I remain longer term bullish on gold and the miners, just looking for maybe a little pullback here. Okay, we'll wrap this up with the yen, because the yen is, as I mentioned, the second largest component. So really, if you get a read on the euro and the yen, you can get a that's all you really need to look at to determine where the dollar is going. Yeah, sure, there's other currencies in there, but they make up such a small percentage of the dollar index. So this is where we were again on that 20 on the video on just, Friday, the 29th of January. We were right here, and I said that we had one of the largest moves in the dollar yen pair in quite a while. That was on the BOJ moving to negative interest rates. So what happened is the initial reaction is one would think the yen sank against the dollar. Now keep in mind, in this pair, the dollar's first. We looked at the euro. It was the euro against the U.S. dollar. This is the U.S. dollar against the Japanese yen. So in other words, when this chart moves up, the dollar's going up, the yen's falling. And as, you know, I don't want to use the word, let's just say as the masses would expect when you hear a country is all of a sudden going from a positive quarter point rate to a negative quarter point rate, their currency is going to sink, and that's what happened. That was the initial market reaction. However, this is what I love about trading. I love about the financial markets. Sometimes the news is already priced into that, so it's a buy the news, or sorry, buy the rumor, sell the news. Currency traders, for whatever part that sharp move in the dollar got reversed, and I had stated the dollar was coming up, the dollar yen pair to intersecting resistance levels that I had. This line here, I talked about how well defined that line was going back with reactions, as well as this uptrend line here. We had tag, 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 breakdown, and a back test, or very near back test. We fell just a hair shy. But that, again, was the sharp move in gold was due to this. After the initial reaction, everybody was scared, bought the dollar, sold the yen against the dollar, and then boom, that day it was a massive, let's say, bear trap, bull trap, again, depending on which side of the trade you were on. Very violent and quick move. Now, where are we at? This is important. Right now we have a reaction here. Not the best, but there is a reaction, some reactions back there that gives us a little bit of support that the yen's coming up on. So again, if we can get a bounce here, as I'm calling for just a short-term bounce in the dollar, that would be dollar up against the yen and yen down. That would help for my case here for a little near-term bounce in dollar, which could give us a little short-term pullback in gold. But ultimately, I see us going down to this level. This is a much better, I will call it much more solid support level around 110. You can see it on the box, 110.10, almost 110.11 on the pair. And near-term, let's zoom down a little bit. We'll zoom down to a 60-minute chart here. And here is my reason for leaning towards a bounce in the dollar. I already made the case with the divergence on the euro. Now look at this pattern here. Given this uptrend line, it only has, well, it has a few tags. It's something to watch, but more importantly is the divergence here on the 60-minute chart. Now this is actually already at this point confirmed. We have the MACD turning up. It's sort of making a whippy, may cross back down here shortly, but this is what I'm highlighting here are the bullish divergences now in place on the yen, US dollar yen pair. Here's my trend indicator on the 60-minute time frame. One of the trend indicators that I use, 1333 EMA pair. When it's green, the trend is bullish, and when it's red, the trend is bearish. So it's been bearish, but you can see that's why I like to put divergences on the trend indicators, the histogram as well. So this indicates a likely reversal. And if we get that reversal, it could be pretty sharp, because I mentioned there were those bear flag patterns, or bull flags in the euro US dollar pair. So you probably had a lot of traders positioning on that breakout or of that continuation pattern. And if it fails, then we'll see pretty quick reaction. Targets, let's see here. For you currency traders, I don't know how many are out there. That's a pretty solid level right there. And we also have this downtrend line. So let's just say ultimately at least a move up to that 116.56 level in the yen. But again, bigger picture also confirms dollar weakness. This is a weekly chart, and I'm going to wrap it up here. We've had long-standing, nearly 2-year negative divergence. This was a divergent high back at this point. If you follow the vertical lines on the crosshair up, let's go up here. When the dollar yen pair peaked back in 2015, it did so after a what I call double divergence. We had a divergent high at this point right here, and then this last push up with these yellow lines to that point, we had even steeper divergence. So double negative divergence on the weekly time frame tells me the very strong likelihood that the dollar will continue to sink against the yen in the coming months and in 2016. My targets. This is a well-defined, fairly well-defined support shelf around 115.94. You can see the reactions there, reaction recently, and now we just broke down. So again, I don't have the strongest opinion on a bounce here, because if I were to just tune out that 60-minute chart and the potential divergence there, and again, we haven't had anything remotely triggering a sell or a buy signal there. But this would be, just looking at the daily charts, I would say we have a little, this much more downside to go before a meaningful reaction off that pair, and then ultimately we break below this level, we go lower. So, zooming in, again, we're looking at a weekly chart here. So yes, we've had that breakdown. That is bearish longer term. So maybe, remember, if you look at a weekly chart and you zoom in on a 60-minute chart, let's say we're looking at a back test here. That would be probably equal that move that I just mentioned on the 60-minute chart. So a back test to keep that breakout intact, the breakdown, and then a move down to my next target area over time. So this would give us that opportunity for a quick pullback trade in the miners and gold that I'm looking at. And then hopefully give us a nice re-entry level, at one of the good support levels down below, and then recycle back into those on the long side for the next major leg up. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.